Welcome back. Now, the financial services sector in Africa is undergoing a transformative wave driven by the growing adoption of artificial intelligence, AI technologies. Now, according to recent reports, AI investments in Africa's financial industry are projected to reach $5.5 billion by 2025, now showcasing the significant impact of this emerging trend. Benjamin Dada, fintech expert and consultant, joins me virtually from the UK to talk about this. Now, Benjamin, it's good to have you on the program.
Hi.
Benjamin, what kind of disruption should we expect following this projection?
Absolutely. And I think, even your numbers for, the 5.5 billion, if we decide to blow it open, we see a deeper picture. So, for instance, in just the first quarter of this year, the funding in that global AI space is 5.4 billion, which is already matching what the whole of Africa, is projected to do in 2025. So the kind of disruptions I'm expecting to see are things around like business process and operating model restructuring. So what that means is that, businesses will begin to look at their departments and their functions, and they'll be figuring out how can AI either augment some of the capabilities that we have. Take, for instance, customer success, right? Before now, it was very manual. Then we moved to robotic process automation. But now with the advent of, chatbots, and businesses can leverage ChatGPT. So we expect customer success to be more seamless and more effective in that area. But what this means then is that there will be some jobs that will be displaced, but then it means that some new type of jobs will be created. And I think this has always been the debate about whether AI can create jobs as fast as it will take away some jobs. But overall, it's always a net positive when we find a way to leverage technology and make it work. The final thing I would say is that, like, with the disruption that we're expecting in the AI space, we can expect more focus and tilt towards AI as an industry in Africa, right? So if you look back a few years, there was payments, the payments industry was growing as fast as possible with startups. And then like last year, we had crypto and Web3 startups spring up in Africa. We are seeing a similar trend with AI startups. So if you look at the first half of 2022, crypto startups raised about $121 million in Africa. And in the first half of 2022, we also had AI startups raise $112 million. So we're seeing a similar trajectory for more startups going into the AI space to build businesses in Africa. So those are like the three major things I wanted to highlight today, that there'll be general business model restructuring and operating model restructuring. There'll be some job displacement and job reorganization. And then there will be more focus and tilt by startups and thinkers in the AI space, particularly as it relates to Africa.
We don't particularly like the job disruption or job displacement part of that disruption, but you mentioned some areas. I just want you to go a bit more specific now to what areas have we seen uses of AI in Africa? What areas have been impacted by this new AI buzz?
Absolutely. And I think what's even more interesting is that beyond even comparing like the trend by industry, I wanted to also paint a picture around how AI has actually been operating in Africa for about a decade, right? InstaDeep, a Tunisian startup, was recently acquired by biotech, and they were founded in 2014, right? Smile Identity, founded in 2017. And, these players have been existing for a long time in Africa, but just the same way COVID accelerated remote working and all of that, we're seeing that, generative AI has sort of accelerated the move and the focus on AI in the workplace. So some of the areas we've seen AI play, and we will continue to see AI play, is around identity and onboarding. So with identity and onboarding, you can now do things like, smart selfie, face matching, APIs. You can do things around even optical character recognition. So you can get someone to feed in their bank statements, and then you can use AI to extract the data from there and make sense of that data. Another aspect that we're seeing AI disruption is fraud detection and transaction monitoring. And this goes beyond just the rule-based engines that people are used to, but it goes more towards intelligence, right? So how do you do things like behavioral biometrics, which means that by just pausing and wasting time before you enter some particular information, that serves as a data point for an AI algorithm to figure out whether you are the maybe original owner of the account or you are an authorized user. So fraud detection, transaction monitoring, being able to generate like a risk-based score per transaction is an area in which we're seeing AI being deployed. And like I hinted to, credit risk assessment and coming up with more accurate credit scores, those are some of the areas in which we're seeing AI. Because before now, many of these things were either manual or suboptimal. But with AI and intelligence, beyond just having data and analyzing it, the data can learn from itself. So the more you do these things on your data set and the more you run your algorithms on your data set, the better it becomes over time. This wasn't possible before AI.
Yeah. So you just raised some concerns here, and you mentioned fraud, privacy, credit risk assessment, credit scoring. I do know these are concerns that, institutions will be worried about, or individuals will be worried about. What regulatory changes or policies should we expect with regards to this?
Yeah, that's another great question. I think regulators so far have tried in a way, because when you look at AI, it picks from a bunch of other industries. So there are things around cybersecurity, right? There are things around KYC. We talked about onboarding and identity. So yes, we would see that, more businesses are going to look into, the aspects of their AI usage that already has pre-existing regulations. So things around even data privacy. In Nigeria, we have NDPR. Data bill was recently signed as well. So yes, businesses will continue to look into, what am I doing today that already has an existing regulation. But then for the regulator to stay ahead, especially in Africa, they need to be the ones driving some of these conversations. So in the UK where I'm based, they've spent about 110 million just to create something called like a tech mission fund, right? So that way, the regulator stays at the epicenter and attracts all the innovation to itself. In fact, it invests in prototyping and allowing people to experiment with how AI can, even deliver government value or deliver public service value, or even in private sectors, right? So by creating like tech funds and by orchestrating those kind of AI conversations, the regulator will stay on top of this. And then the final thing is like, now they need to review again all of the existing regulations that they have put forward in that point one. So you look at your cybersecurity regulation, even open banking regulation, because AI in itself is not just like a standalone. It's always a part of like a technology stack, right?
Okay,
so maybe the way I'm getting data now is not just by uploading bank statements, is by connecting to a user's account directly and pulling that data. So essentially, by reviewing some of the existing regulations they had passed before the AI craze started, that would make the policy landscape more robust and more suited to what's happening today.
Okay, Benjamin, we'll look forward to that robust elaboration for policies in the banking sector with regards to artificial intelligence. Thank you so much, Benjamin Dada, fintech analyst, for joining us on the program today. Now.